Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. With the Easter holiday period now past, the Australian dollar bullish traction, as we saw late last week, has somewhat settled down or waned as the pair now close back towards the region of 71.24 to 40 in the hours of early this morning. With the technical pattern breaking down, we've nearly got the marriage now of the RSI with the MACD, and therefore could see further pressure and target the level of 71.05 and down towards 70.65, where I've highlighted it here, and this was where the previous return of demand was evident in the market. On the top side, I see resistance at 71.65. The euro at this stage is still holding to a bearish pattern. This being now a possible flag, could see further weakness and head towards the target of 111.6080 with minor support seen at 112.15. It is assessed from 111.60 that profit taking, as recently seen before in front of that level, has emerged. But from a technical point, we are still quite heavy. And from the dollar index, is now back up at 97 and focused on 97.5. The dollar yen is breaking down, and as anticipated, since the recent risk of a North Korea tension heightening, could actually see the market pressured the 111.45 to 110.7080 as yen strengthens, even though the dollar index is somewhat holding to a bullish stance. Any advances should still find a struggle towards a level of 112.45. The sterling outlook still holds to a descending triangle and now pressuring the key level of 129.70. It is assessed underneath there should give a measured move to a target of 125.5. But we do need to see the break and confirmation, so I'd rather leave a stop entry around 129.46 and a stop around 129.8090. In that way, I feel the market should, in case we do see a false break, unlikely to get back above the 70 level. If this pattern does hold, and with the trend now strengthening slightly to the ADX, I believe the pressure continues on the downside. Well, since the market fell from 1,324, is that pressure has remained on the downside, and with 1,280 broken, also increases the bearish case. At the moment, though, I'm holding an objective to 1,255 to 65, unless we get a break of 88. The break of 88 would reinstate the upside and give us a target around 1,300 to 12 to 24 as recently seen highs. But technically, though, we are looking at a possible shape up to the upside. So let's see if we can get above 88 for this week. In the meantime, though, support is seen key at level that is at 1,255 to 65. And rounding up with oil, well, the market rallied 2.5% after Trump has waived all sanctions on Iran. This has caused a bit of an upstir, and you can see the market has clearly taken out the level 64, which was the measured move of the inverse head and shoulders. At present, though, I don't hold a view, but from the given factor of where the market holds, could see 67 as a potential target in the near term. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoyed the great start to this new week.